You're listening to the Options Insider Radio Network. For more quality options programs, visit www.theoptionsinsider.com or search for Options Insider Radio Network in your podcast provider of choice. Listeners can also access all of our programming through our mobile app, available in iTunes and on Google Play. Don't forget to follow along with your favorite programs and submit your own questions for the hosts at twitter.com/options. Facebook.com/TheOptionsInsider or via questions at TheOptionsInsider.com.
Join us now for the expert source for inside information on the options markets. It's time for Options Insider Radio with your host, Mark Longo.
All right, everybody. That music means it's time once again for Options Insider Radio, the interview program here on the old network where we welcome on guests from throughout the world of options and derivatives and proceed to pick their brains for the benefit of you, the listener. My name is Mark Longo from the aforementioned Options Insider Radio Network, as well as, of course, from the old optionsinsider.com. You guys know where to get us by now. If you like the podcast version, of course, head on over to your iTunes, your TuneIns, your Stitchers. If you want to go deep back into the primordial ooze of the network, the dark days, over a decade ago now, then you can check out the website. Indeed, our mobile app, the best place to do that. A lot of the iTunes and the other outlets will maybe limit you to the more recent shows on there. If you want to take a nice deep dive, that's the place to go. And of course, you can always join us live. Just grab that Mixler link, follow us there so you'll know, be notified the second we go live. And however you listen live after the fact, make sure you hit us up, questions, comments, insights. We do like to hear from you guys out there. And joining me on the program today is an old friend of the network, even though he hasn't been on in quite some time. He's been busy doing quite a few things over there. He is Tom Sosnoff, the co-CEO over there at Tasty Trade Inc. Tom, welcome back to the Options Insider Radio Network. It has been too long.
Yeah, it's been a long time, Mark. Thanks for having me on.
Well, Tom, the reason we're bringing you back, not that I don't want to talk to you all the time anyway, but the reason we're bringing you on, of course, is to celebrate your storied victory in our options broker madness. You guys know out there, listeners, we do this. We started this 3 or 4 years ago, I think. It was kind of a fun way to kind of mix up the options brokerage space a little bit, give the options traders a chance to play along with March Madness and just do something fun. It was kind of a one-off lark, and then it kind of really took off, and people seemed to like it, and the firms really got invested in it. So we kind of turned it into an annual thing. I believe this is our fourth, I think, time now doing this, and it's really become an interesting tournament to watch. And of course, you guys, Tastyworks, one of the newest additions to our tournament this year, took the top prize. So first off, congratulations. And then secondly, what do you think it is that really sets you guys apart from the rest out there?
I don't know. What did we win? A trip to Disney World or something?
You get our enduring love and respect and an awesome trophy if you guys ever want to come in the studio here and collect it.
Okay, sure. So you know, I don't know. I think we're a very hands-on, customer-friendly firm, and I'm just guessing that, you know, we have a, Mark, we've always had a really kind of loyal, almost cult-like customer base, and it's awesome. And so I don't know. I think it's the fact that, you know, we've been around for a while and we have a pretty good reputation. That's for sure.
Speaking of, you've been around for a while, because you're right, you've done this before. You've done the whole brokerage thing before. Of course, ended up selling it out to TD Ameritrade. What prompted you to want to dive back into those crazy shark-infested waters of the options brokerage space? And I think you did it about a year ago. So back in 2017, what madness possessed you?
Yeah, it was kind of weird because it was never our intention again. I mean, we loved, building Thinkorswim was a great experience for us. And we didn't sell it because we wanted to. We sold it because we were a public company and, we got bought out and we didn't really have we had lost control at that point. But we had no intention of building another brokerage firm. We were building a network and and we loved the media business. We were doing our thing. And at some point, we decided that in order to control the fee structure, in order to control the technology, in order to control kind of the entire customer experience, we needed to own the brokerage side. So, and it wasn't our game plan all along, but we just felt that was, that was probably the best solution for what we wanted to do. And so we just got back in, and it's been awesome. Love it.
Well, yeah, it's been a little over a year now. I think you guys launched it back, Jan of 2017. So you got a year and change under your belts. You said it's going awesome. How has that first year been? Are you seeing a lot of the customer adoption? Are things really where you wanted them to be so far at this point, a year and change in?
Things are, I don't look at businesses kind of the same way as everybody else. I kind of think about all the businesses we build, and I think of kind of the totality of, everything we're trying to do. And, we're in the world of Tastyworks today and Tasty Trade. We're where we were 6.5, 7 years into when we built Thinkorswim. So, in 1 year we did what we did in 6 or 7 years over there. So things are moving at a different pace. That's for sure. That said, the fees are a lot lower. The cost structure is much tighter. It's just, the technology is much faster. It's really a different world. I mean, brokerage is brokerage, and I get that, and many of the legacy platforms are kind of the same. But we decided to do Tastyworks and build it very different. The middleware is all high-frequency technology, so the platform is lightning fast. It's ridiculously stable, and it was designed to kind of scale our vision of what trading should be. It's for active traders who like to trade lots, like to trade small, like to trade all products. We couldn't care less what the product is, and so I think it's just it's a really it's a really pretty platform. It's beautifully designed, and it's I don't know. It's just kind of our vision of the future, and it's working quite well. People love it.
Well, you mentioned kind of the evolution of the space, and you're right. And I was looking at the participants in our broker madness this year, and it was a very new field. So there were a lot of new entrants. So people have been kind of wringing their hands for the last few years, looking at all the M&A going on in the options brokerage space and saying, oh no, we're only going to be left with a handful of choices in the brokerage space, and they're all going to be the big Leviathans. But yeah, you guys obviously did very well. You won the tournament this year. We saw a lot of strong showings from other new entrants like Robinhood, who's still, I think, in beta for options, but people seem to like what's going on there. The Lightspeed guys did really well. So a lot of new entrants really shaking up the option space these days, which for me, it gives me hope, Tom, that we're not all doomed to trade with the same 2 or 3 Leviathans over and over. So I'm happy to see you new guys are really staking your claim out there.
Thing in that regard. I mean, we're building stuff right now that's over the course of the next year. We're about to launch a completely free advisory, the first one in the country. We're about to launch some new technology this summer that's going to change, we think, kind of the core of the industry. I don't think the disruptors and the visionaries in the space of not just options, but, just derivatives in general and trading in general, I don't think they're going away anytime fast. And I don't think the big firms that are currently, at the top of the food chain with respect to the industry as far as customers go, I don't think they're all going to be there 5 or 10 years from now. It's going to be a very different market.
Yeah, a lot of them weren't as they like to live on the margin. That's been a rough business for the last 5 or so years, as we all know. Kind of gone away. A lot of them have to fix their transition to a more transactional-oriented business model, which a lot of them haven't really been used to. Speaking of those transaction costs, some of the things that resonated with me when I was looking over the Tastyworks stuff, and I'm sure that resonated with a lot of our listeners that were voting in the battle this year, were one thing, Tom, whenever I have the CEO of a new brokerage firm or an existing brokerage firm on our network, the first thing I always ask them, or maybe not the first, maybe like the third, is I ask them, I say, hey, do you charge people to close out shorts when they get to a dime or less? And you'd be amazed how, even in 2018, how much pushback I get on that. People say to me, oh, well, we still have costs and we don't want to incentivize certain types of trading and et cetera and so on and so forth. So that always drives me crazy when firms do that. They make people, because we know there's this mental barrier to a lot of the active traders out there. They won't pay more in commissions than the trade is worth, even if it incentivizes them to take risk off the books. And it's good for the broker. It's good for everybody to take that risk off. So I like to see you guys are not only doing that, you guys have gone the extra mile. You don't charge for closing trades at all, which I think is awesome. And I hope that becomes the wave of the business going forward, Tom.
Well, we were the first firm, when I built Thinkorswim back in 2000, we were the first firm to introduce closing trades where any option under a nickel, we could let you close it for free. So we introduced all the way back in 2002, and people thought we were out of our minds. And we loved that feature because it made no sense for us for people to hold an option for the sole purpose of hoping it expired worthless when you could just take all your risk off and free up the capital. So we introduced that, and firms used to make fun of us, and they would write us letters, and and they'd say, you guys suck, and all this stuff, in compliance terms. And we just used to kind of laugh back, and now a few years later, I see Schwab, E-Trade, Fidelity, they're all doing the same thing. So it's pretty funny. But with Tastyworks, we decided, you're right, to go the extra step and say all closing trades are free. Doesn't matter what price an option is, doesn't matter what you do. Every single time you make a closing trade, it's free. And so I think that's really cool. And we've saved people this year, a ridiculous amount of money over in the last 15 months or 16 months since we launched. So it's been a huge change to the industry. And, listen, that's what we do. We have different vision than everybody else, and we're not afraid to implement it.
Yeah, it's interesting because you're right. You don't charge fees on any closing transaction, so you're not incentivizing people to only be short, that they're long. They go against them. Why shouldn't they get some of the love as well? Certainly, they're not happy if they're closing out their longs for under a dime. So make that pain a little bit less. Make it free for them. You guys also capture fees on spreads at $10 a leg. So I know a lot of the let's say the hardcore Iron Condor crowd, and we know they're out there, as well as a bunch of the other multi-leg spread folks. I'm sure a lot of them are pretty pleased with you, Tom, for doing that.
That was a big decision for us to decide, to cap everything at $10. And a lot of people have no idea. Like, there's people out there that trade, 50, 100 Iron Condors, 50, 100 vertical spreads. Just, they'll sell 100 cheap puts or buy 100 cheap calls, whatever it is. And it's $10 max. So you are capped at, like if you do 100 lots, 10 cents a contract. If you do, a 50 lot, it's the fee structure is such that everything comes out. The max you can pay for anything is $10. It's unbelievable. And so we've really changed, we've absolutely just changed the industry, in that regard. It's crazy.
Yeah, it is crazy, and I think a lot of our crazy good in this sense, because I think a lot of our listeners will certainly appreciate it. You touched earlier on the tech and kind of how the space has evolved since the last time you did the brokerage dance, probably about a decade ago or close to it. It's a different business now. Like I said, margin has kind of gone the way of the dodo. Might be coming back now. The rates are ticking back up, but it's not the cornerstone of the business the way it once was. The transaction cost, like you said, the front end revenue has kind of come down. It's a much lower cost, lower margin business. And also the costs to do it, the costs for tech are much higher. I mean, you guys know probably better than anyone how demanding the hardcore active retail clientele is out there. They're demanding. They want all the cool bells and whistles on their platform. And if they don't get it, guess what? They're going somewhere else. So, it's got to be challenging for you guys. I mean, you mentioned the tech, but now getting back into the space again in 2017, 2018. How hard is it for you guys to really try to keep pace with some of these big, deep-pocketed firms that you're competing with who are realizing platform is the name of the game and they're spending tons of money? Or are you guys trying to evolve? You mentioned kind of some of the middleware. Are you trying to take a more kind of maybe lower cost alternative to try to keep up with the Joneses out there?
Well, that's fair, but remember that most really good fintech and software developers don't want to work for big banks and big brokerage firms. So one of the advantages we have is that, we're an innovative firm that builds really cool technology, and we change an industry. So when you get a young developer or a skilled developer, they want to come work for firms that are challenging. Developers aren't as much motivated by money as they're motivated by intellectual challenge and development challenge. And to be fair, these young developers don't want to work for certain fintech firms or certain financial technology firms or financial service firms. So we have a huge advantage in being able to attract talent that, other firms can't attract. And then we also have the advantage of being much more nimble because our technology is all built on brand new technology. Our platform is built on brand new technology. So we don't have to support any legacy technology, which means that our dev team can build new stuff and cool stuff. And, we don't, most of these other firms spend 90% of their technology revenue supporting legacy technology. We don't have to do any of that. So that's our advantage. Sure, we don't have the money they have. And, but we also don't have to do all the garbage they have to do. So it's pretty, it's good. Listen, we're not complaining. We love it.
Yeah, you're right. You look at some of these big platforms, it's how long it's taken them to merge. Let's say the Schwab OX and E-Trade Options House are doing that dance now. TD had to do it with TOS back in the day. Just integrating those platforms. And you're right, dealing with all the legacy features. Some of them were developed in the primordial ooze days of the option space, and you have to keep supporting that stuff. You're right. There's a lot of garbage behind the scenes that probably sucks up a lot of those costs. Speaking of kind of the big players and kind of how they've changed the options brokerage space. In the last 4 or 5 years, we've seen most of the independent players get gobbled up by the big players. There aren't really, until you guys and some of these new iterations came along in the last year or so, there weren't really a lot of new independent players out there in the space. And you mentioned kind of at the top of our conversation here that it wasn't your choice initially to sell to TD. You liked doing your TOS thing. So I'm kind of curious now that you're taking another go at this. Is the end goal to keep it independent and remain Tastyworks for the foreseeable future, or do you think inevitably, given the way the industry has gone, that eventually you guys will join up with some larger firm?
No. So when we were Thinkorswim, at one point we went through, we bought another company and we did this and that, and through the process of that, we ended up being a public company. And once we were a public company, we had built a really strong business. So there were a number of firms. We had three public firms bidding for us at the same time. And so we really had no choice, in kind of during the economic crisis in 2008, 2009. But as Tastytrade and Tastyworks, we're a private company now with no intention of going public. And so we plan to stay, very private and for a long time to come. And we're happy with, what we're building and we love our business. So no, there's no, that's not even, something we even think about for 1 second. Yeah, no interest at all.
I'm sure you got back into it. You don't want to. You're not in a hurry to get back out of it again, right? It seemed like you like what you're doing.
What am I going to do?
Yeah, you'd be bored. What would you do?
I love what I do. I have no interest in working for somebody else. My 2 years of working at TD when they bought us was fine, but I couldn't wait to get out.
Yeah, I'm with you. I like doing my own thing out there as well. Speaking of some of the new things, the new evolutions of the space out there, a lot of the brokers that we talk to and work with, they're pivoting to other new areas to try to draw a lot of new volume. They see people are interested in things like crude and gold and other areas these days. So futures and futures options have become a big pivot point for a lot of these brokers in an attempt to kind of drive a lot of new volume. I know you guys offer that at Tastyworks over there. Is that a big part of your business going forward? Are you guys kind of surprised by that uptake? Is that a kind of a core pillar for you guys these days?
Well, we're not surprised by it because we were the ones that pretty much drove it, back in the TOS days and then also, at Tastyworks. So it doesn't surprise us at all. It's, none of the growth in the business from cryptocurrencies all the way through to, greater use of futures and things like that. None of that really surprises us. I think it's just normal kind of parallel growth. So the demise of the stock business is also of no surprise to us because it's not capital efficient. So I don't think it's a surprise, but what would surprise me more is if there's not greater product advancement over the next couple of years. I think you're going to see an explosion in, and this will be good for your business as well as our business, but I think you're going to see an explosion in self-directed investing and self-directed participation. I think the days of passive investing, both in bonds and stocks, are over. And the public is 99% invested passively right now, and I expect that ratio to come way down to like maybe, somewhere in the 80s. And if that happens, you're talking about, millions of more people, entering the, active and the active and the self-directed marketplace. And I think that's going to be really good for all of us. And I think that's what people should do. It makes absolutely no sense to have your assets passively managed. I mean, you learn nothing from it. There's no valuable takeaways. And I think that, learning how to take risk and learning how to make decisions is so critically important for everybody that it makes no sense not to be an active manager of your own capital.
No, you're preaching to the choir here. I was down at the big Inside ETFs conference earlier this year, and it was kind of a little nauseating to me to see how much of it was just dedicated to pure passive capital. Everyone's riding the market up, and they're just going to ride the market right back down again like lemmings and sheep unless they learn a few intermediary steps along the way, which is why the options content business is such an important one. It's funny. I obviously keep this is a space that's near and dear to my heart. We've been playing in this space for a long time, since the primordial ooze days with the first options podcast, back when we were the only people, I think, crazy enough to really think options media was a business, let alone a good one. And we've seen the space evolve a lot. You guys obviously have gotten into it hardcore with the tasty stuff. And it's been fun to watch kind of the evolution of the space. It's become an ecosystem now, which is something I've always said it could be. There was a demand for this. There was an interest for this. We used to talk to brokers and other firms for years about saying, you really need to engage the people on the content side. So it's been nice to see kind of the evolution of content as it relates back to the option space. We're seeing a lot of firms now waking up to the fact that, hey, content, it's kind of a good thing. It keeps people engaged. It educates them. It drives idea generation, which a lot of the brokers are all drooling over themselves these days to get. So in that sense, you guys at Tasty have a leg up. But what's your take on some of the other brokerage firms now starting to, shall we say, appreciate the gospel of content, Tom?
Yeah, or copy what we do. Either one. I think it's kind of funny because they're really bad at it, but I mean, for the consumer, I think it's good long term because it's about time. I don't think the content they provide is necessarily very valuable, but I do think that the fact that they've made the commitment to learn about what their craft is more valuable. For years we've watched the financial service industry, from large banks to large brokerage firms, basically offer services to customers but have no clue about, who the customers are, what the customers want, and what the customers want to know. And for the first time, these firms are actually learning, they're learning themselves, and they're learning that through content. So I think that that's a step in the right direction. I mean, I think the bad part is that they're so, compliance heavy, and they're so limited in their know-how, and there's such a huge concentration. Right now, the biggest problem these big financial service firms have is there's such a concentration of wealth, and there's such a small number of decision makers that you end up in a kind of, it's not a great situation for them, but it's better than it was because at least there's content out there now. So I think you'll see this trend continue to evolve, for some time, and it makes total sense that these firms, try to provide content for their customers. I mean, and they'll learn themselves. So, the bottom line is it's a good thing. I just don't think the firms are very good at it yet.
Well, as you learned, Tom, content's a hard business. It's not. Everyone gets into this.
It's really hard.
Everyone gets into this thinking it's easy, and I'm sure, Tom, when you got into it, you were probably amazed at how challenging it is to create compelling content, let alone on a regular basis. It's a challenge. So to see all the brokers, selfishly, I love this. I love to see brokers getting into this space and realizing, the value of content, because it just kind of reaffirms what we've been doing here since the beginning. But you're right. It does kind of bring a smile to my face to see them, shall we say, stumbling through these first efforts of trying to provide. Everyone sees that and says, I can do that. That's easy. And they try to do it, and they realize, wow, that's really freaking hard. Let's see. We got a lot of people chiming in. They're asking some questions, Tom. You mind if I throw a few of our listener questions at you?
Fire away.
All right, let's go for it. We got, let's see here. FB5 wants to know when he's going to be able to trade futures options in an IRA account on Tastyworks, Tom.
I don't know the answer to that. And the reason is we haven't been able to find a trustee who will approve it. So the problem is not the functionality. The problem is finding a trustee who will allow you to do futures options. Right now, there's only one or two trustees we know in the whole country that will do it, and we don't currently use them. So is there anything legally wrong with it? No. Is there an IRS problem with it? No. The problem is that IRA accounts, are done through trustees, and trustees just haven't, they've permissioned futures, but not options on futures. Sorry about that. Not yet, at least.
Yeah, the trustees are, shall we say, a little bit late to the party here on this one. But yeah, I'm sure you guys would love to. Everyone wants to have more functionality in an IRA. And that's funny. I was just playing around with one of my legacy old IRA accounts. I think has been changed from firm to firm. I haven't accessed it in active trading capacity in a while, and I was just horrified at how terrible the functionality is, particularly for anything options related. Which reminds me, I need to migrate that one to a better firm. But that's a conversation for another day. But you're right. The functionality, particularly on the IRA side, for a lot of these firms, let alone the custodian side, is shall we say, lacking. Speaking of functionality, Jack77 wants to know: does Tastyworks offer portfolio margin and API access, Tom?
We will offer portfolio margin at the end of June. We'll be launching portfolio margin, and you'll have API access we're hoping for mid-July. So it's built. We just haven't built remember, it's a new platform, so you have API access in the middle of July and portfolio margin at the end of June.
Every firm seems like they're implementing the PM a little bit differently. They have a little bit different level or requirement. Are you guys going to put your own tasty kind of spin on it? And what are your thoughts of portfolio margin in general? Some people think it was a great change for the business. Others think it's kind of maybe a little bit overhyped.
I was a big proponent of it from day one, and I continue to be a big proponent of it. If used properly, the thing with portfolio margin is, anytime you increase a customer's capital efficiency, you've done something positive for the customer. So from my perspective, portfolio margin is a very positive thing. The problem with portfolio margin is the firms don't have the firms can't, we can't make portfolio margin a tasty type thing. Portfolio margin is pretty much regulated from top to bottom, from the individual requirements per underlying to almost every aspect of it has to go through regulatory approval. So portfolio margin doesn't give us a lot of flexibility, but I think it's positive for the customer. I don't think I could find a negative from a customer perspective on it.
Tom, I like to ask every big brokerage and CEO who comes on the network this same question, just to kind of get the pulse of the community. So I'd be remiss if I didn't send you away without asking you this. I think I know how you're leaning, but I want to hear it from you. We can see a lot of debate, particularly around this time of year, earnings season, around the lack of after-hours trading for options. People always hit us up. Yeah, I bought calls in Google, and now the thing's up 70 handles in the after-hours, and then it opened up unched. And, why is this happening to me? I could trade stock after hours, but I can't trade options, et cetera, and so on and so forth. I'm sure you guys get inundated with it over there a ton at Tasty as well. I'm curious, people seem to be pretty deeply divided on this issue. What are your thoughts on after-hours trading for options? You a fan? You not a fan?
Well, so I'm one of those people that would be a fan of 24-hour trading 7 days a week. So to say I'm definitely a fan, I don't care if they ever close the markets, from my side. But the problem is that, and I understand this, and you see this with commodity options right now. The problem with commodity options 24 hours is that nobody makes markets overnight. And so essentially you're waiting for customer orders, and they're incredibly inefficient, and they open themselves up to a lot of liability and scams and, pricing, just pricing ripoffs and things like that. So the problem with listed options, and remember, it's not like they haven't tried. They've tried SPX options. They tried Dow options a while ago. They tried VIX options before. There was at different periods when we tried Treasury bond options earlier. I mean, there's been a lot of attempts to do option trading in pre and post market over the last, 3 decades or so, and they've all failed. And I personally would love to see it. But the problem is, I don't know if these market making firms have enough juice in the width of the markets to make it worthwhile. Like, for example, if you're making a market at 3 a.m, you're not making a market in, let's say, Spiders or Qs or, or Google. You have to make, you have to have an active stock market as well. So if the stock market, if the equity market in Google is $5 wide after hours, then your option market is going to be $5 wide after hours. And then what good is it? So I'm not so sure that there's enough activity globally yet to make it all work. And I'm not sure that it's worthwhile for the market making firms to staff a team around the clock. Nobody's been able to make it work yet. Nobody's been able to make it work in any market. They can't even make it work in the S&Ps. They can't even make it work in gold or silver, or crude oil for that matter. So it's going to be a tough one. I hope that it gets done. I'm totally in favor of it. But right now, I don't see it as being, I don't see these firms being able to make any money by doing it, because I think that the markets will just be too wide and too inefficient.
No, you're an old school market maker like myself, so you bring up kind of the plight of the market makers. The other question I ask most people who come through the network here these days, and I'd be curious to get your thoughts on this now as well, is you're right. It's a rough road for the few remaining market maker firms that are still in existence in the option space. There's been kind of a diaspora away from the space since you and I were on the floor, certainly in the last decade or so. I'm curious. Now that you're kind of an outside observer on the space like myself, what are your thoughts on what we could do maybe as an industry to try to help maybe reverse that trend? Because at the end of the day, less liquidity, that hurts everybody. That hurts you guys as a broker. That hurts the customer. That hurts kind of everybody. So what do you think we could do to maybe stem that tide a bit?
Well, actually, I would argue right now that the liquidity right now is the best it's ever been. We've never had functionality, speed, data like we have today, and the market making firms that do exist today and that control the lion's share of the marketplace are better than they've ever been in the history of this industry. So customers that are routing orders right now are getting the best fills they've ever got, at least from a theoretical standpoint. This is as good as the business has ever been. So I would argue that I'd like to see more capital, being committed, but the problem is that you need scale. And most of these firms just don't have the skilled technologists or they're not able to acquire scale because they don't want to pay for it. So I think what happens is the firms that are in there right now, they're killing it. I think anybody would love to have the business that Citadel and Wolverine and Susquehanna and IMC and all those firms that do, and Citigroup, the firms that do the lion's share of the market making. I think they're killing it. I think they're making, billions of dollars, and I think they're just, it's a home run for them, and they don't want more people involved. That's why they're making such good markets this year. I mean, the quality of fills in 2017, 2018, it's never been better. So, and we monitor this for our customers, and the level of fill and the quality of fill is ridiculous. So, I mean, it's just, we've never seen anything like it. It's so good. So I would argue that it's not a problem of lack of market makers or anything like that. I mean, of course, we'd love to see more competition, but it's just more business. I think the more the business grows, the more market makers will show up.
So you don't have any concerns then as a broker that, outside of the top, say, 19 or 20 names, your Apples, your Facebooks, your Googles, your Spies, that do about half of the volume of the business, outside of that 20 names, you don't see any issues from your clients about maybe having a little bit wider or harder to execute? You see no concerns about that as a broker?
I think there is, right now, I think there are 15 highly active names, and I think there are about 75 tradable names. And that does not include commodities. So if you add commodities, you can add about another 10 names to that list. So there's about 15 equity underlyings that are highly liquid. There's about 10 commodity underlyings that are highly liquid, and there's probably about 75 total that qualify in kind of the next tier down. Once you get below that top 75, the markets become far less efficient and far less liquid and far less efficient. That doesn't mean you can't get fills. They're just, it's not as good. So you're exactly right there. But I don't know if that's a function of poor market making. I would argue that it's much more a function of much worse stock markets. So I would argue that much of the problem with option market making does not stem from option market makers. It stems from the New York Stock Exchange. It stems from bad commodity exchanges like the ICE and different stock exchanges like that just make bad stock markets, that widen out stock markets so that the option market makers, they have to make wider option markets. So I'm not so sure if the option marketplace is any less liquid. It's just that the names are more concentrated because money flows to liquidity. And it should. As a retail customer, you're crazy for not trading in the top 75 products. You never should vary from there because that's where all the money is, and that's where the liquidity is, and that's where the fairest prices are.
Well, Tom, it's been great catching up with you again. We'll have to do it more often than once every 5 or 6 years or whatever the last time you were on. I think it was our Volatility View show. We were talking VIX futures of all weird things. We'll have to do it more frequently than that. But that said, we had kind of a bit of a wide-ranging conversation. Touched on a lot of interesting, cool stuff coming down the pike from Tasty. You have the advisory section, which sounds very interesting. You talked about the tech, the API, the IRA stuff, and futures option stuff coming down the pike soon. That said, if there's anything we missed or maybe anything you want to add, maybe you want to leave our listeners a little bit of a hint, a little bit of a tease of what's coming down the pike from you guys, either on the work side or on the Tasty Trade side, now is the time, sir. The floor is yours.
Okay, sure. Well, it's funny because later this week, we will be launching we'll be the first firm on the street to launch naked options in an IRA, naked calls in an IRA. I think you'll like that.
I do like that.
We will be doing that, and no other firm currently does that. So everybody always thought you weren't able to do that. So finally we're launching that, hopefully by the end of this week. That's naked calls in an IRA. And so, that's the kind of innovation that we're working on. There's also a ton of new products. Like I said, we just launched, we're in the process of launching a fee-free advisory, which is not designed to manage your money. It's just designed to give you a second opinion. And we built it completely different from any other, registered investment advisory. So that's super cool for us. Other than that, it's just, it's speed, stability, it's introduction of new products. I mean, that's pretty much, what's on the agenda for us near term.
Well, Tom, I said it was great to get you on. Next time we'll have to get you in studio so you can come pick up this giant trophy that's sitting on my desk here. It's poking me in the arm right now, so I need to get it out of here. So at least you got to come. At least you got to come in here and get it. Maybe we'll put a beret. We'll have a nice beret engraved into it. What do you think?
Sweet, man. Sweet. I'll take it. Thanks, Mark. Thanks so much.
All right, Tom. Great talking to you. Everyone, you know where to find them. Check out tastytrade.com, and indeed, Tasty Works. You want to check out maybe some of those naked calls in an IRA, get your blood pumping, check it out over there. And of course, we'll be back with more Options Insider Radio very soon.
The preceding program was a production of the Options Insider Radio Network. For more quality options programs, visit www.theoptionsinsider.com or search for Options Insider Radio Network in your podcast provider of choice. Listeners can also access all of our programming through our mobile app, available in iTunes and on Google Play. Don't forget to follow along with your favorite programs and submit your own questions for the hosts at twitter.com/options, facebook.com/The Options Insider, or via questions@theoptionsinsider.com.